Let's get in Aashish Somaiyaa also into the discussion from WhiteOak Capital. WhiteOak Capital's AMC, of course. Ashish, thanks very much for your time. Congratulations, first of all. The AMC which you acquired, the Yes Bank AMC, has been rechristened as WhiteOak Capital AMC. How's the status? How are things coming through? You guys are building institution and a company brick by brick.
Yeah, thank you, Ajay. Thank you for having me over. So, as you rightly alluded to, I think the regulatory processes are all in place. I mean, all approvals and our registration is in place. And like you rightly said, the AMC is rechristened as WhiteOak Capital Asset Management. In terms of status, we are now engaged with the regulatory process to file for our first set of, offer documents for approval for launch of equity-oriented funds. So, somewhere in the first quarter or at least the first half of 2022, we will maybe hit the road.
Ashish, you've been an insider of the asset management business for such a long time. You've seen the days when the margin structure was extremely healthy, but the penetration was low. Now that asset management is almost becoming a consumer staple item, and SIP is becoming a part of every household with each increasing passing month, but the margin structures are actually coming down. How are things shaping up for this industry as a whole?
I think you put it very, very interestingly. From consumer durable, it has become consumer staple. So I think that's a very interesting way to put it. It's become a mainstay. I think mutual funds have become ubiquitous now. And, putting an SIP and saving every month has become par for course for most people who understand that capital market participation in the right way or in a structured, regulated manner is the right way to go. I think everybody who appreciates that definitely is getting in. In the early days, of course, the mutual fund distributors and asset management industry did a lot of hard work. I think in the last few years, the digital so-called say boom, for example, has resulted in even far better penetration, and equally important, I think it's like a democratization of information. So I always say, when a product or an industry is in very early stages of its evolution, it's all about distribution. People don't know too much about it. So whoever reaches the consumer first, that product is bought. When the industry evolves a little bit, then I think it's the big brands which win. But mutual funds are now at the next level of maturity, where I think merit is winning in the marketplace. So now it's all about performance, the kind of perception of sustainability of performance or the promise of performance, and product innovation. So, you can see that there are a lot many players coming into the market purely because the industry has become more meritocratic. And of course, digital medium and social media and of course, media at large has also made it more democratic with the availability of information, analysis, etc.
So where will the margins of the industry move? Do you think they'll hover around this place, or volumes will be the key, or do you think they will slide from current levels?
I think they will stabilize. We are getting to an equilibrium. So for example, if you really look at, say, equity mutual funds, fixed income mutual funds, there is huge amount of diversity. The reason being that you're talking all the way from overnight funds to right up to, corporate bond funds or, funds with, say, a 10-year duration profile, etc., etc. So in fixed income funds, I'll leave that aside for a moment because it really depends on what type of yields are there in the underlying, instrument itself. So fixed income, let's leave it aside for a moment. But if you talk about equity, for instance, 2-3 things to really keep in mind. In the last 3 years is when a lot of regulatory changes have happened in terms of upfronting of commission, amortization of those upfronts. And then, of course, the TERs have been cut because TERs have been calibrated according to the size of AUM. So that is one thing. The recent changes, that's one thing to keep in mind. Second, of course, is that there is something to be kept in mind that alpha is not infinite. I think, every fund management style and every type of product has a optimal capacity. So what type of size can you manage is very, very important, because it's not like you can have an infinite size and still produce the kind of alpha that you would like to produce. So I don't think that it is an unlimited scale kind of proposition. And hence one has to arrive at an optimal combination of how much assets you can manage and what type of net retention or net yield you can make on those assets. So if you ask me a long-term sense, my sense is that equity mutual funds, actively managed equity mutual funds, should stabilize at about, say, 50 basis points of net earning to any manager, 50 to 60 basis points. I think, mind you, India will be actually lower compared to many other markets. But whatever I read of the current market scenario and the trends of the industry, I think equity mutual funds on a net basis should give an AMC about 50, 60 basis points. That is active funds. And then again, passive, again, it varies depending on the kind of specialization of the product or whether it's a commodity. Passive, again, is like fixed income. It can have a very, very wide range depending on the product. But active equity funds, I think a good indication is maybe 40, 50 basis points right up to 60 basis points.
Right. That's a very specific answer. I really appreciate it. Aashish, how are you really witnessing when you interact with your top team and also in the industry? What sense do you get? Where are we in the market cycle right now after 3 good years? Now that it is becoming mainstream, equities is becoming mainstream, that there's a talk of new capex cycle starting. Where do you see the Indian markets and economy right now?
So Ajay, frankly, I don't see it as 2 good years, because 2020 was not exactly a good year. First we had this massive crash, and then eventually along the year in 2020, people realized that, well, yes, human beings are not the next dinosaur, and the world didn't come to an end. So it was more like, we undershot heavily, and then we kind of recovered, knowing that, okay, vaccine doesn't take 10 years and case fatality is not 5%. And like I said, human beings will survive. So 2020 was more, a year of panic and then some amount of recovery. I think the only year where, well, yes, people have on merit, made money is maybe, say, 2021. And I'm not in the camp currently which says that just because we made some money in 2020 and 2021, so by law of averages or by mean reversion, 2022 has to be a bad year. I'm not in that camp. So on your question, I would say we are still in the early stages of a economic recovery, or maybe not the commencement, but, well, yes, early stages. If you were to divide it into 3 parts, I would say we are still in the 33 percentile kind of thing. So early stages, that's how I would put it. And I think that if you look at valuations, if you look at earning trajectory, like you rightly alluded to, that investment activity has yet to pick up or is likely to pick up. So all of those things put together tell me we are in the early stages as of yet.
Ashish, to a large extent, be it battling COVID, navigating the economy out, corporate India has done its own bit for their companies, repairing their balance sheet and, kind of going through the ups and downs, and things are looking upward. Government had its own role in terms of policy reform, which could cushion the blow and pull the economy out. And hence, together, we are looking at 3, 4, 5 years of that capex cycle, which you also agreed to. Do you think budget will also be a platform where government may actually take some further steps in the direction of reforms, or bulk of the reforms actually now happen outside of it? But it is, whatever said and done, it is a platform government would want to give out a message to the overall, to the country, to investors and everybody, isn't it?
Yeah, see, just like when central banks take the stage and, when they talk about policies, we don't exactly expect that every time there'll be a number change in terms of the rate announcement, but definitely we watch for the language. I think the budget also, financial budget or general budget, has also become something like that, where you look for the stance or you look for the language. I think those are the things one would watch for. Second is, obviously, you would look just for the areas of thrust. I mean, you don't expect them to come with big bang, because, through the year, they have been doing something equivalent of a big bang. And we know, clearly the government stance towards corporates, towards investment activity has become far more, not only accommodating, it has become far more friendly. I think there are some past issues which are actually getting resolved. You see the telecom sector, the government is supporting it. You see those past lingering tax related issues, I think they have been thrashed out. So not only are we accommodative and friendly, I think we have also been resolving issues in an amicable fashion, which would give some comfort to investors, whether they are domestic investors or they are global investors. So I think that is one. So budget is not the only place where big announcements are happening. They are happening all year through. So from that perspective, the budget is more about the language and more about the stance. And I would say that after many, many years, this is a year where we are well ahead. Of course, we are not in line with the FRBM Act and all those relaxations that we took. That has definitely deviated from the path. But in general, if you really ask me, compared to how we would have imagined things at the beginning of the year, versus where they are ending up, what was the deficit forecast, what was the growth forecast, what was the forecast for tax collections, I think there is significant outperformance on every parameter. There is significant outperformance, and obviously the government can take credit for many of the things that they have done in terms of a supportive environment or in terms of policy actions. The industry and all the economic participants more or less have kind of played their role. So somewhere I would say that this is probably the first time where we are well ahead of our targets, and things have turned out to be much better than what one would have originally feared. So I think that if there are no big untoward instances on the global macro, I would feel that this budget would still continue to emphasize that we need to encourage investment, we need to be growth oriented. And I think, look at it this way, one of the lessons of the last 1.5 years is very simple, that if you get growth, then deficit becomes lesser of an issue. In 2019 we had no growth and we were cutting deficit, right? And 2021, because we've been able to get growth, we are doing better on tax collections and on deficit. So I think that in itself is a lesson that if you can encourage investment, if you can encourage growth, then you can grow out of a lot of your trouble. So I hope that the orientation remains on those lines.
Right, excellent answer. Ashish, thanks very much for your time today, and good luck on the AMC part as well.
Thank you.
That
Thank you
was
for having me.
Aashish Somaiyaa of WhiteOak Capital AMC Business.